Good morning. Happy Friday. Well, didn't see yesterday coming personally, not until after it was already underway. But hey, charts say what's supposed to happen, and then we see what actually does happen. Maybe I should have given the benefit of the doubt to let's looking at the spies here, the questionable move up, which essentially was only this part of the move. Well, really just here. And then we talked about a sideways time correction versus a price correction moving down. Maybe it's still a time correction. We'll see if there's any follow through today. So yesterday we talked about voids and about could it enter the void to the upside. And that's what happened. So we talk about wide range bars and that they're momentum moves in smaller time frames that create price voids, and that they are the weakest link. Well, why are they the weakest link? Because they create that void. And while prices are not supposed to retrace very far into the void, if it gets too far, it begins to unwind the message of that bar. And what does that really mean? It means that it begins to flip the psychology of and bias of institutions and traders, because a bearish bar, like in this pattern that we saw, creates a bias. I should short this. It's going to go lower, even though, it showed some strength coming up and it's up at the top of the range. So now, as it began to move up, which you can see here on the 15-minute chart, while it stalled there at resistance. That bottoming tail bar was really kind of the coffin nail for bears when it dipped down and came right back up again. And of course here, and it just continued, by the dip, you can see the tails on the 15-minute chart. Just pointing them out here. That one. And then, of course, that one, a little consolidation right at the pivot high, refusing to go down. Tried and up it went. So now we've got another void down below. And so far, not a big deal as far as the S&Ps here go, because they're at the top of the wide range bar and no damage done. I put a horizontal line in the middle of it, which lines up with this little congestion area, and give or take, you look at it pretty much, I would say, like that is where you'd want to recognize the support is, and keep an eye on that as to, getting down here would be pretty deep. You can see there's nothing to stop it. It's not supposed to go down there with a pattern like this. Just like this, it wasn't supposed to go up to the top of it. And I cleared it. Of course, it began to accelerate. So this is what we got. And now things are whipping around this morning on some news, but this is down here at the bottom of the range. And we'll see if it follows through lower or not. So here, it's already into the void. You can see on the 15-minute chart, you can see the cursor there. So coming down into that area, that green area there, makes sense to me, because that's where the support is. Are the bottom charts, this middle one is a 15-minute chart. You can see here, this is a 5-minute chart on 24 hours. This is what I call a day chart, 9:30 to 4. And this is a weekly chart. That's a 60-minute. That's a daily. So, things are pulling back a little bit here. So let's look at the futures, and we'll get to SPX. So no big deal. We got a topping tail ignored and a wide range bar up. And here is the void, just like we had. This one is cleaner, because the way it went up was just that fluid move. there's little to nothing to stop this from going down. Maybe trader pivot lines or a VWAP or a fib line, which is erroneous. But as far as support and resistance goes, there's nothing. I mean, even minor, what we call minor support is subjective because it goes beyond what's to the left. Where these bars overlap each other, there's probably a little support there, which we could probably see on the 15-minute, which what I would say is right in here. And right in here. Of course, I don't want to do that. Let's do this. Shoot, I'm trying to move along here and pressing buttons that I don't want to press. I probably should have turned that green before there it goes. It duplicated it. So when we see a fluid move like this, where you see overlapping bars, right, in the higher time frame, odds are there's going to be some consolidation in the smaller time frame. And there it was on the 15-minute. Now, that doesn't mean it has to get down there, but if it gets down there, that's where it's got the highest probability of buyers beginning to step up. So far, we see this pivot right here where you had this pop up and it came back down, and we'll see if that pivot, you can see there, actually holds or not. So just looking at this chart, our assumption would be, hey, probably a resting day. That's what happens after a wide range bar. Might jiggle around a little bit. If it does dip down, this is where the support is. So you want to keep an eye on that. Now, the Qs are getting a little bit more. I can see they're coming off their low a little bit, but that's more interesting as far as the void goes. So with SPX, definitely would be below here. And I had 4080 written down. There isn't as much premium there, 4085. So Jake, when you write 7580, that's the area of the strike you want to use, or you're not saying 5 wide, are you? I don't think so. Can't do 5 wide, no. And 4190 up above. We know it's right up here. 4190. Yeah, is there still premium there at 4190? No, you'd have to wait to see if it would rally up there because there's no premium at 4190. You got to go to 4180. And is 4180 safe? Well, it'd be unlikely, but if this was a real bull market, I would say no, it's not safe because you could easily get 2 wide range bars popping up and that could be hit. Remember, yesterday was 4140 or above. So as it was rallying, you damn well had to get above 4140 because, and that's why waiting a few minutes, where like here, it was going nowhere, nowhere. And then it popped. And that was a signal that it was likely to at least come up here. And, you got to get further above, closer to maybe 4,200. No, that's kind of far, but anyway, far enough away. So factory work should not. It can get to the top of there, it'll be hitting the wall, but we know it's already backing off down here. And it should stay in the upper half of this bar. You can see right here, somewhere in here as it pulls back. And even if it dips down, buyers should be willing to step up more aggressively. And I question whether they'll do that because it's at the top of the trading range. You can see the weekly chart, the top of the trading range. And sentiment is still dead neutral, so no advantage there. And while this is up here, this isn't an alignment. So this tells us, accidents can happen. What does that mean? Breakout failures. It's just a caution sign, but these two have not been in alignment. And I can't remember a time when sentiment has just been so neutral for so long. Well, so far, Tony, it's been a time correction. So this was the momentum move, and then it created the pivot here, which we knew it was a pivot 3 days later. We knew it was a pivot. And now this red bar has been ignored. So what happens next? Bar by bar analysis. This is not a pattern that we would say, hey, this is a trade. It could be a put spread pattern. Now that you've got this pivot and red bar ignored, that would make sense, especially 0 DTE, right? Why we're talking this, below this pivot, that's going to be a good area because it would be like, crazy for prices to get down there, and highly, highly unusual. So that would be beyond any expectation of normality. So down below this area, so if the markets do begin to drop for whatever reason, you'd want to be down in this area, so there's a line of defense. Now, here we see these have been deteriorating, and so far it's in the top part of the range, so no real damage done. But look at this void. Went straight up yesterday once it got moving. And so that's 8 o'clock, 9 o'clock, and it gets, taken it off up to the top of resistance area. And now we've got 3 pivots of resistance. So probability is this isn't going to go much higher today than this area. And it's got room to fall. And we'll see how much it does or the lack thereof. There's a little support right here. You can see this little tiny area where it began to stabilize. So I say, you don't need trend lines, fib lines, VWAPs, what I call find tools. Look to the left. That's where the buyers are going to be. Tesla. Is the NQ 60-minute a stage 4? What part of it? No. Right. So when we get into talking that old terminology of stages, which basically came from that book written by Weinstein, if you ever read it, it's in a trading range. I don't think that's what he meant. So this is, I don't know, is this a topping pattern or is it a bottoming pattern? Right? What is it? Right here, you can say this right here is in an uptrend, and right now it's going sideways. So, in that terminology, a stage 3 is sideways, which assumes it's going to go up. Well, it's in a trading range here. We'll see next week whether this bar, or in part today, whether the extent of which sellers can push into this bar. We know it's not supposed to, right? Just like this bar was not supposed to form because of this wide range or range expansion topping tail bar. That's a very bearish bar. Now, it was at the 20 MA. That doesn't mean it can't go through the 20 MA, but it had this void. And when that began to unravel, clearly buyers just jumped on board and ran it up to resistance. And now it's going sideways. And now it's going to have to find some other level. Right? Got to find some other level to create support. Maybe next week, look, if this market can hold up, let's see how it can hold up today. If it can clear this area, it's got the 200 there and the declining 50, but if it can continue to go sideways here at this resistance and clear this, that's going to be supportive that it can go up. But right now, today is all about, hey, this is pulling in a little bit, no significant damage done, but Well, if you keep watching the Russell futures, if it breaks under that swing low, there's another little void down here. So right now things are just erratic and choppy, and everybody's going to figure, well, yesterday was crazy after the day before, maybe it can continue to go up, or let's see what it's going to do here in the first half hour. Now, clearly that looks bullish, but here's the top of the trading range. You always got to look to the left and say, hey, here's a pattern that looks bullish. Where might it go? Well, the top of the trading range. Maybe it can clear it, but since it started the move down here, the upside, as I see it, is limited. Okay. Gold taking a rest, well-needed rest. The dollar is getting close to support. Where's that symbol? We'll see what's going to do next week, but look at this week's range expansion bar. It's kind of grinding its way down there. And this was a momentum move down. This is, maybe not a textbook W, since it came up here a little bit, maybe a little bit too much, but major support. Just like we watching the 10-year down there, just rattling around forever. But this range expansion bar after multiple bars down, the downside momentum is going to stall. We'll see what happens. But going into next week, call spreads on gold miners, maybe, debit spread, whatever. They should start to weaken if this begins to turn around. And silver should do the same. It's had a heck of a run. It's still bar by bar. Really no weakness on the daily time frame, but momentum is stalling. You can see the bodies here are getting a little smaller. Oil staying up there. It's at the 200 MA. Oh, there's a little inflation concerns. Bitcoin doing well again, continuing to push up into this resistance here or take. So this has had a pretty good correlation with the broader markets. So I would set an alert on this, or you could use that GBTC to see if this little breakout, if it just failed, that would be another piece of information to support, the markets possibly having a deeper pullback. And the VIX, which broke down and mentioned yesterday, set an alert up here. That'd be another piece of information that would be supportive of if this market is going to start to correct lower, if that turns out to be a breakdown failure. So that's it from me. Those of you on social media, have a great weekend. And I'll turn it over to Dan.
Good morning. Yeah, I was reading in the journal today how Bostic made comments that, it sounded like one of those, hey, I'm purposely wanting to egg on the market higher. So yeah, one more hike and then we're done, good to go. Inflation coming in, nothing to worry about. And yeah, that's quite a reversal. I mean, we were bullish in the morning based on that price action. I was hoping it was going to go sideways, and that's Greg talk about it. That was a power move there. So let's see what we have in our interest list. Bank season started. So let's start with that. Where are you? Where are my banks? Something happened here to my minder. All right, way up here. All right, UNH. I was looking to do a call spread yesterday, things that rally this much. Whether it opens up, down, or sideways, 30-minute low, call spread candidate. So that would be a perfect 0 GTE if it sets up. And we were talking in the green room yesterday, the price action, these things beat up that, at least Alex and I had, and maybe some others. I had a bullish bias. I didn't take any trades, but it's beat up and didn't go down anymore. And the markets are expecting horrible news. So it's like the path of least resistance is like up. And that's what we're getting here. But this one, the gap's too big. Man, look at that gap up. I would not have expected that. All right, Greg's mentioning Tesla. Let's write that down. No, Tesla. Yeah, under today's Friday, under Wednesday. Oh, you mean under yesterday's low or Wednesday's low?
No, under today's low. If
What do
it
you
breaks today's low, that's a green bar. It should go through Thursday's low or
Well,
Wednesday's low.
That's what I'm saying. Yesterday's low. All right. And
I don't think you need to wait for it to get below yesterday's low. I mean, it's close.
all right, well, I'll watch it at the open. So let's watch banks and bank ETFs or put spreads. BlackRock is not a bank, but big money center and gapping up. 30-minute high. These are bottoming patterns. The Citigroup's been showing more relative strength to bounce off the low here. They're well off their highs, but still holding fine. PNC is a regional bank that looked horrible. And I made the comment in the green room over this red bar. I think it could go to like 128-ish, just get a relief bounce. So I got that in the middle chart. I like that one. Boeing here, bottom right, had some news about halting the 757 deliveries. And I would like it better if it were gapping to 195, because right now, right 202, it's in the middle of no man's land. But I will watch this for a possible put spread if it sets up. And then one more earnings here. This was up, now it's down. Looks horrible, daily, weekly, monthly. But it's light volume though, so I'm gonna kill it. Yeah, K, yeah, I have that on the list right here. Yeah, but it looks great. Yeah, let's watch that on a pullback. Yeah. I mean, Bob, this is a pattern. I know it's down a lot, but I think it was tradable up or down based on today's gap. It's either going to bounce into the void or there's going to be more bad news, and it would have a bearish gap and get another sell-off and enter it at lower prices. Let's continue here. ACO. We went through. I updated my core watch. Let me post it to you again here. And so I set new alarms, but vocal here. I like that's a textbook W bottom with what we call new low plus. Look at this momentum move, bounced, new low, and bam. So then it's done its job. Now your entry is daily, weekly. And it's just not clean, but it's on my list. Hive, another one. I think this is a Bitcoin stock. Block. Look at this beautiful bottoming pattern. Look at that block. That should have been a core long. Right on this gap up on Tuesday. That was the entry. We actually have Ether though in our ETF trader. Same kind of, we got it right on this gap breakout. So that was a 1000% excellent entry. Right there, the gap breakout, inverse head and shoulder, bullish weekly, monthly, bullish Bitcoin. We got BTBT long, same kind of concept. We bought this breakout right on that bar. Looks fantastic. ARC F, I like over Wednesday's high. FinX, these are a couple ETFs we were looking at yesterday. Hack, it's bullish, daily, weekly, monthly. ECL, bullish, daily, weekly, monthly. Intuit, over Wednesday's high. This is, flagpoles, kind of what we call a bull rectangle. The bullish weekly, monthly. Garmin, it's not a 1, 2, 3 because this is a red bar. Nevertheless, it takes out the high. I like that. Yum. I would like a 1, 2, 3 if we get an inside bar. Wex, also inside bar would be ideal. Then we buy it Monday. BMY. It's sell set up on the weekly, but it's a watch. Etsy's a bear 1, 2, 3. I posted that yesterday as a call spread. It's good to go if it triggers. Here's beautiful bottoming pattern. Triple in here. I got Boeing on my other computer. Let me put triple in there. And I got UNH on the other computer I'm watching for a call spread. Chevron continuation. Target bear 1, 2, 3. Under yesterday's low. Deer, we did a call spread yesterday. Riven's a bear 1, 2, 3, but it's gapping down here. It's just range bound. It had some delivery numbers. Oh no, it got a downgrade. This one had some delivery numbers. LCID, it's still junk. I was thinking it might have formed a nice bottoming pattern here, but now it's getting whacked right back down like that whack-a-mole game. So SPR is a supplier of Boeing. It's getting whacked here with it. HIG had a pre-release number gapping down to 69, so that's a bearish gap. PGR got whacked yesterday with a pre-release losses on their bond things, just like the banks. QDEL, gap's too big. VFC, that's big old bottoming pattern. Just watch that on a pullback. I looked at some of these hotels. These are my 3 go-to hotels. Hyatt, Hilton, Marriott. Look at that 180. I would love an inside bar, and then that looks great for Monday. Hilton, same 180 reversal, but when you see a 180 like this, that's telling you it's extended intraday because it went down a lot and went up a lot. So that's why ideally a 1, 2, 3 is the best. Look, Marriott breaking out right now. This would be a fantastic put spread. I looked pre-market. It was not that juicy. Let me look again. Marriott, 160 for next week. 40 by 80, so they're too spready right now, but I like those patterns. And then the White House is weaker, but this is one where we would trade the laggard if it took out that high because it has a bigger void. So I set an alarm at T&L. I scanned TC and I hit all the hotels, and so T&L was in there. UAL has earnings next week, but it's a bear 1, 2, 3 if it triggers. Jets got smacked right down. Bottom right, Triple M looks great. Spiders, if they close here, so 1, 2, 3. Q's bigger gap down. You see into the range. It's about a 35% gapped in. Yep, IWM. Be a no-brainer put spread if it closes like this. So here's this regional bank. That's a gap breakout from a bottoming pattern. You can buy 30-minute high. This deer up alarm. That's not looking good, Greg. We're short Nvidia via long puts, and that's still relative weakness, which is good. It's actually a bear 1, 2, 3 to add. SMHs are stronger, so see how Nvidia. So Nvidia is an example of the opposite of what I said with that White House hotel. Of trading the weaker one. In this case, we're trading the stronger one because it's up the most and has the biggest void. So it's relative weakness to the SMHs. LYV alarm here. We have a put spread that expires next week, but I already had moved the stop tighter of whatever and break even. Look at this stupid deer. And this PNC middle chart. All right, say that's still weak as can be. It gave up the this nice gap up, gave it up.